Hello, everyone. Welcome to the market update for Tuesday, February the 1st. Again, to start out, if you have any questions during the week or any questions that don't get answered in class, sometimes I don't see the questions until later, or sometimes they'll get typed in right at the very end when I'm shutting things down. So if I don't get to your questions, or if you think of something during the week, just send them to jerry@traderspro.com. I apologize for having to cancel the stock-specific class last Thursday. My daughter was in the hospital and had a lot going on during that day, but luckily everything's good, and we're back, hopefully back to normal now. But anyway, I appreciate your patience with having to cancel that. And to be honest, there really wasn't a lot I was going to be going over. As you know, I've been very cautious in wanting to jump back in, and I'll point out some of that stuff today as we take a look at when would we get a little more confidence in the rally. A couple key areas that we want to look at, keep an eye on. But anything I probably would have gone over on Thursday would have been waiting for confirmation, waiting for these levels to kind of get hit. The one area that I do think that you could really be in right now is the oil stocks, and I talked about that last Tuesday, and that's really all I'm holding in the portfolio right now. So. But we will go over a couple of potential patterns that we can look at today. But let's first get into the market conditions. Now, for those of you who are new, and maybe even those of you that have been around for a little while, there's a routine I'm going to go through in these market update classes. And the point of the market update class is to get a feel for the current market conditions. Is the market looking more bullish? Is it looking more bearish? Is it looking like it's moving sideways, not really going anywhere? What are kind of the key spots of the whole market we want to keep an eye on? And the reason for this is because if the market's trending down, it looks like it's going to continue to move lower. We don't want to be buying a bunch of stuff. We want to be waiting, because the philosophy here is that we're trend traders. We're trying to follow the trend. We're letting the big institutional traders figure out where they want to go, where they want to buy, where they want to sell, and we're just going to try to follow along with them. And so the point of this is to gauge that. Before we're going to be looking at opportunities, we want to gauge the conditions. And if the conditions are looking like maybe we have further to drop, we don't want to be holding on. That's why I got out of everything in my portfolio a couple weeks ago. We went right to cash, and we didn't get hit by that big drop that took place because we were out of the market at that point. So now what we're trying to do is gauge this rally over the last couple of days to see if we bottomed out, or if there's a little bit further we can drop, and kind of go from there. Oh, I appreciate that comment. Thank you. All right, so let's start off with the directional alerts. This is something we've been kind of keeping an eye on we're always keeping an eye on it, but these had been down in the extreme oversold area here. We're starting to see momentum kind of move this direction. We're almost in the hold area. Markets are a little bit mixed today. NASDAQ's down a little bit. Dow's up. NASDAQ's down. The Russell 2000's been up. It's just kind of basically flat to mixed. There's not a whole lot going on today, but there was, over the last couple of days, we saw a pretty strong rally taking place. Now, you can get these strong rallies within downtrends, and that's why we're going to focus today on, okay, how do we know, is this a suckers rally that's going to end with this market going down a lot further, or can we be a little more confident in our buying? Those are things we'll take a look at. But as far as the indicators here, really with the indicators, you're looking for extremes, or you're looking for the health of the trend. If the market is rallying up, one thing I'll look at is, we like to see momentum picking up, moving. In other words, I like to see it moving in this direction. When you see the momentum indicator all the way to the right side of this extreme area, that can usually mean you're about ready for a market pullback or sell-off. When you get all the way to the left side of this extreme box right here, it can tell you that the market's probably getting close to a bottom, and it might just be a near-term bottom, a bounce where it could get a bounce, because we did get into this extreme range, as you remember, a couple Mondays ago, and was it just last Monday? It might have been just last Monday, not this Monday, but the one before. But it bounced off of that. But that is an indication of, I keep an eye on these extreme levels right here. And so it kind of can help you gauge whether the trend is gone too far in one direction or the other. Breadth is also something I'll take a look at. The breadth indicator is right in the trending area. That's a good sign, because what happened near the top of the last rally was that we were seeing sentiment was high, and it's been high. We'll look at that one here next. The momentum was actually pretty good, but the breadth was lagging. It was lagging quite a bit, which means that another word for breadth would be participation. There weren't a lot of stocks that were participating in the rally, meaning that the rally was being propped up by just a few stocks. A few companies were causing the indexes to go higher. Well, that's not a healthy sign. If you think about, people pulling a wagon or something like that, and they're pulling a wagon up a hill. Well, if you've got 40 or 50 people pulling that wagon up the hill, that's a healthy run. You're moving up the hill, and it's probably not a lot of stress on everybody, because there's enough people there to bring it up. On the other hand, you could still have that wagon go up the hill and only have 4 or 5 people pulling it up, but obviously the strain on those 4 or 5 people is going to be a lot greater, meaning that they may not be able to keep that up very, very much longer before they collapse in exhaustion and let go, and the cart goes racing down the hill. So maybe that's a little bit of an analogy to understand market breadth, that when there's a lot of these stocks participating, that's a healthy rally, and that you can have a lot of confidence that can continue. When there's only a few stocks causing the indexes to go higher, it can often be a sign that you might be near a top. And sure enough, in hindsight, we can look back and say, well, there was a warning sign there. That lack of participation was warning us, maybe we don't want to be jumping in too aggressively. Now, it's more complicated than that, because sometimes those things can be temporary. You could have breadth lagging a little bit for a couple of weeks, and then suddenly it picks up and starts participating. But there again, that is helpful, because now if you start seeing more stocks participating, breadth is moving in strongly, you can trust that rally a little bit more. There's more people that are now jumping in and pulling that wagon up, and you have a lot more confidence you can make it up the hill then. So that's the breadth indicator. And then finally, sentiment. This is what's been bothering me for quite a while. Is that sentiment has been too high, and another word for sentiment is it's measuring fear and complacency. When you really get a big market sell-off, and we saw this back in the COVID sell-off back in 2020, you saw the sentiment get all the way down here in the extreme fear range. You don't see it get into extreme fear very often, but what's been bothering me is we've been up here around the extreme complacency area for quite a while. I know we're not in extreme complacency right now. We're just in high complacency. But the problem is that we've had this market sell-off, and yet there's been no fear in the selling. There's been no concern. We couldn't even get into the trending area for sentiment. It was just although I think we did briefly get into trending. We might have briefly got into trending at that real extreme low there. But so the reason why this bothers me is one of the signs of a market bottom, a true market bottom, what you could really rally off of, is you see panic selling, you see fear, you see people that are afraid to buy. And we just haven't seen that yet. We've gotten close. We got close for basically a day. That one Monday where we really dropped, and I believe that was the Monday before yesterday, the week ago. It spiked the VIX up. It started to show the fear, but then it reversed. It had a bullish reversal, so it really didn't last very long. And so that concerns me that it might not be the exact bottom. Now, again, when we look at the chart here, I'm going to show you a couple key areas that can give us a little more confidence. But I'll continue to point that out. That because if we do finally get a big sell-off and we see the sentiment really start dropping, it doesn't even have to get into the fear range at this point. If it could just get into the left side of the trending range, I'd be a little bit more confident that in a bottom taking place. Now, again, I'm talking about a major bottom here. You can have medium bottoms and mediocre bottoms, if you want to call it that, along the way that are still tradable. But the ones that really give me confidence to go in and be aggressive and where you can make a lot of money. And again, remember, we're in cash right now. So I've got a few of the oil stocks, but I've got a lot of cash in the portfolio. I'd like to see that true bottom where I could just deploy all that cash and then ride that trend back up. And what I mean by temporary bottoms is that you'll have these stair steps like this, and that's what we were in for most of last year. These little stair steps like this, and these are all little temporary bottoms. They market pullbacks, they bottom. You're not going to get extreme fear in these bottoms, but you can see a little bit of a change in market concern, and then you get a larger pullback that takes place before going higher. And this is where I want to see fear at the bottom of these larger corrections. I want to see that capitulation. Now, we have seen, when we look at the indexes here, we have seen that there's a lot of sells versus buys. So, and that's why it's been kind of hard to read this market. Is there really has been a bear market for a lot of individual companies. A lot of individual companies have pulled way back, but we just haven't seen it in the indexes yet. And that, again, that's what makes this a little bit more complex. Now, that's okay. One of the things that makes a market is that the market will always find a way to make sure you don't know exactly what it's going to do. And that's why with these chart patterns, the price action, the candlesticks I show you and things like that, they work most of the time, but they're not going to work all the time, because they can't work all the time, because if they did, you'd make money every time. There would be no marketplace. The market has to function on uncertainty and on the fact there isn't absolutes. There are no absolutes in the market. And if there are, then you have actually probably a manipulation going on, a market manipulation going on, which isn't going to be in your favor, and you wouldn't want to participate in that. Because if someone actually has the power to move the market wherever they want and have full control over it, then it's not a market anymore. Okay. And you could have some arguments as to, is there some of that going on in the markets these days? I can assure you that there is no full control by someone in the markets, but there are some questionable things that go on that make it seem like there's manipulation, or there's possible manipulation in certain areas. But again, that kind of concerns me a little bit. We'll keep an eye on that. But for now, there's if we do start rallying back up, there should be some confidence in that rally, or we should be able to have some confidence in that rally. Real quickly here, let's look at the buy-sell ratios. You can see we're coming out of a little bit of an extreme range. We had a majority of sells versus buys. Whenever you get these extreme wide ranges, there's usually a tendency to move back to the mean or move back together again. Now, these right here I wouldn't consider to be really wide. These are extremes. Now, again, this is not an exact science right here. We're just looking at relative. Is it relatively extreme? So we got some of those indicators moving into that, into those oversold conditions under the direction alerts there, and we're seeing extremes in the buy-sell ratios, lots more sells than buys, and that tells you you're at a little bit of you're probably pretty close to a bottom when you see something like that. So that would be an indication that this could still. Well, the problem is that if we get another move down, it's going to happen pretty quickly. Meaning it'll drop within a few days. You'll get this panic, and then it'll probably slowly start rallying back up as people get burned. When you get burned and you lose money, you're not real confident to go in and start buying. So you tend to see a little bit more of a steady rise off the bottom, and that's why the real sharp rise from the last 2 days is not usually a great sign. Although there are some bottoms that kick off pretty quickly with a couple good sharp trading days, but you like to see more of the steady rally, and you like to see the smaller rallies in the indexes. Meaning, if you have like a 400 or 500 point rally in the Dow, that's usually not a good sign for a healthy uptrend. You like to see just the steady every day. It's up 50, 60, 70 points or 100 points or something like that. Now it's kind of 100 points is not that much of a move anymore percentage-wise. I would say you'd like to see like a 0.5% move, just consistently, day after day after day. Steady is a good, where you don't have that volatility. Low volatility is usually a good bullish sign in the market. And right now we still seeing a lot of these whipsaws that are not particularly healthy. Sentiment indicator is coming off that extreme low. It did get down here under the buy range down here. It's starting to move back up. But you can see we're well below the extreme overbought range. So there's definitely room for the market to rally based off of that indicator there. So indexes here, if you go to the index tab, I've been pointing this out for the last couple of weeks, the ratios. These are extreme oversold ratios. Again, if you look at the Russell 3000, the Russell 2000 is one that that's one of the major indexes that we look at and follow. The Russell 3000 basically contains just about any stock that big fund managers would be buying. There's probably about 6,000 or 7,000 stocks out there, but some of them are so small that the big institutional investors aren't usually going to get involved with them. The Russell 3000 usually is considered to be the bulk of all the stocks that these big institutions would be trading. There's 1,000 of those stocks that are in the sell category, and only 172 of them are have buy signals. So that's an extreme ratio. What would be the opposite of that? What would be overbought? Well, if you get twice as many, you start to get double-digit ratios. You get like 10-to-1 buys versus sells. That usually tells you you're probably getting near a top. But yeah, these are pretty extreme. All right, let's take a look at our charts here. Now, in the last update, I went to like a longer-term chart here. We're taking a look at, and one thing I said concerned me a little bit is I don't know if this is a pretty sharp pullback. Usually, you'll get kind of that three-step pullback. You'll have the initial sell-off. You'll get a bounce, and then you'll get the flush out sell-off right there. And that's what creates that ABC pattern. Although I went back, I'm not going to do it here, but last Tuesday I went back. We looked at that drop back in 2020, the COVID drop, and it was a straight drop. So Could this just be the end of it and we could rally up from here? Sure. But we're always concerned with this little bounce right here that this is maybe wave A, this is wave B, and they get one more move down probably into this area right here for wave C. That would make a little bit of sense right into here. You have a little bit of support right from there, and a little bit of resistance from back here. So right around 400 would be a target. If we have another flush out move, that would be the target. That'd also be an area where typically you're on an ABC patterns, your wave C will be about the same length as wave A, proportionally. Doesn't have to be exact, but you're looking at just a general proportion. And if it dropped down, if the market dropped down to that $400 level on the SPY, it would have that proportion. It'd be about the same length as wave A, and it would kind of fall into this support resistance area here. But like I said, it doesn't necessarily have to do that. The indicators we've just looked at so far, they show me it's definitely, aside from the market sentiment not getting fearful at all, it looks like it could be a bottom here. What's another thing I'm looking at? Well, there's a few here. One, you could go back to, I'll do this while we're on the longer term chart. You can go back to there was a previous all-time high right here. It's not a real straight line there, but we pulled back from it. We broke out above it. We came back to it right here to test it a couple times, this area. Went to another new all-time high right here, tested it again right here. And then when we broke through it, that's when we really started to sell off. So if we can get back above here, I think that would be give us a lot more confidence that the market is going to new all-time highs, and it becomes less likely that we're going to get that one more move down. Now you can see we're real close right here. You say, well, I'm just going to assume we're going to go higher and I'm going to just go buy right here. Yeah, you could do that, but I don't have a problem with that. Just as long as you understand that the risk is still there. There's still risk for downside. And always remember, the markets fall a lot faster than they rise. So you could have a market that goes up for 3 months and it wipes out all those 3-month gains in 3 days. So if you're buying right here saying, I just know it's going to go, I know what this is a bottom, I know it's going higher, just be aware that it might not, and you could get, especially if you're going all in right here, you could get really hurt. And you might say, well, if it does start to sell off, then I'll get out. Well, like I said, by the time you have that sell-off day, it could be all the way down here before you realize, oh, this is bad, before you even recognize that it could go lower at that point, and you've gotten hit pretty hard. So I don't mind that. Just understand you always want to understand the risk, understand reward versus risk. That's why there's no perfect entry point. There's no perfect stop loss point. But what I try to teach you here is I'm trying to teach you how to just manage reward and risk. If you get in right now and you just know for sure we've already bottomed, we're going to go higher, yes, you'll make more money if we do end up going higher. But you're going to also lose a lot more money if we get that flush out move down. And so if you wait for a little bit more confirmation, you'll make a little bit less money because you missed a part of that move right here, but you'll have a much higher probability now that you're going to go higher. And that reduces that risk, that downside risk, quite a bit. So now there's another thing that we can throw in here. And, there's a training I have on Elliott Wave analysis. If you go to the YouTube channel, go to YouTube, type in Traders Pro, you'll start following the Traders Pro channel, and you'll have access to those trainings. But if you want to go through the Elliott Wave stuff, you can do that on your own time. But the basics of Elliott Wave is when you're in an impulsive move, when you're in a trending move, it'll tend to trend in 5 waves. You'll get an initial move, and you'll get a pullback, you'll get a step, another rally, a step, another rally. Wave 1, wave 2, wave 3, wave 4, wave 5. And then typically when that's done, you'll get a larger correction. You'll get your larger ABC. And then usually the trend will go again, 1, 2, 3, 4, 5. Now, again, it's sometimes it takes a little bit of time to kind of learn how to recognize those waves. I can tell you they don't always form perfectly. I don't rely exclusively on a wave count, because I just had wave counts change and things change so often. It can't tell you exactly what the market's going to do, but it's like when I talk about the stair step, alternate between impulsive and corrective. It doesn't always work that way exactly, but it does enough times where you can at least have a lot more confidence in the behavior to be able to recognize that it looks like it's trending or it's correcting or what have you. But as part of these waves, there are rules associated with these waves. And I'm not going to get into all the rules there, but one of the rules is that wave 4 right here can't go into the territory of wave 1. So here's wave 1, here's the top of wave 1. This wave 4 pullback can't go below or into the territory of wave 1. So if you're looking at a chart and you're saying, oh, there's wave 1, wave 2, here's wave 3, here's wave 4, here's wave 5, that can't be 5 waves. That can't be your 5 waves. That wouldn't work, because your wave 4 would have traded in the territory of wave 1. It would have broken into the wave 1 area. So it's got to be something else. And then you'd have to look at see what other possible wave counts could be. And again, I'm not going to get into all that today. But knowing that rule can sometimes point out areas where we can gain a little more confidence. So you can have a 5 waves down as well when you go into these larger corrections. You'll get wave 1, 2, 3, 4, 5. That'll be wave A. Then you get a 3 wave B, and then you get 1, 2, 3, 4, 5 for wave C, and all of that creates a larger, or creates that. All of that movement creates that larger ABC pullback. Okay, so if this could be just wave A. I pointed out that maybe this is just wave A. This is wave B, and we're going to get that flush out move for wave C. Well, if that's the case, if this is just wave A right here, there should be 5 waves in the coming down. So if that's wave 1, wave 2, this could be wave 3. This could be a wave 4 bounce, and then maybe we have that flush out move for wave 5. It goes even lower. I can't even have it on the screen there. Well, and that's possible. We're still looking at that. That's a possibility here. Where would it be less likely that that's a possibility? Well, we can draw a line right across here, and notice that. So that line I drew in that bigger picture was right through here. That's where, remember I showed you on the long-term chart back there, is where we hit that new all-time high. We pulled back. We broke out above it. We tested it. We tested it again. We broke to another new all-time high. We broke it right here. So that area around that 450 area, 452 in that area there, that would be one area that could give us confidence. We get back above there. That would give me more confidence in markets going higher. But also, if this is wave 1, wave 2, wave 3, and this is a wave 4 can't trade in the territory of wave 1. It can't go above this area and be a wave 4. So if we continue to move higher, we get up to about 458. We now know that can't be wave 4, which means it's much more likely the pullback is done. Maybe this is I pointed this as a possibility that this could have been wave A, wave B, wave C, but that wave C would be a really long wave C, which typically isn't. You're not going to see it. You're usually not going to see wave C twice the length of wave A, but that can happen on rare occasions. But it would be much more likely that that's the case if it can get up above this 458 area, get above at extreme. And so really a simple way to put it is, here was the extreme low on January 10th. We pointed this out a number of times as being critical, and it'd be critical again if we get back above there. So this trend line would be important there, because there was a bullish reversal right there. So to get back above there, you're going to see you saw buyers push the market up from here and here. If we get back above there, you might see buyers pushing it up again, get back above here. So I would say, to be on the safe side, I would say about 458 would be about the area that at least I would be a lot more confident buying into that. Today's price action actually is a little bit bearish. I wouldn't be surprised if we saw a little bit of a pullback at least tomorrow. So I wouldn't interpret a little bit, if it does have a pullback tomorrow, that, here we go, we're going lower necessarily. I wouldn't necessarily assume that, but this is what we call a hanging man candle formation, because it looks like if I were to draw arms and legs on this guy, it looked like he's hanging from the gallows right here. But that tends to be a little bit of a bearish price action. This is bullish when it happens at a bottom like that. But if this type of price action happens at a top, so here's one right here. It's kind of at a top. Didn't drop immediately, but that's kind of a little bit of a bearish price action. We saw a pullback a few days later off of that. And we'll see. I mean, unless we start really rallying strongly into the close, and that looks a lot different at the close. And it's very short term. Like I said, doesn't mean it's going to start a major drop necessarily, but all right. So again, that'd be kind of the critical areas to look at. Now, one thing that did concern me too down in here was, I talked about this last week, is that we were kind of moving a little bit sideways. I think I talked about this last week. Let me get my days. That's Tuesday, Monday, Friday, Thursday, Wednesday. Oh, no, we really didn't know it yet last Tuesday. But throughout the week, we basically we're just kind of moving sideways. We kept gapping up, and then we'd sell off. And we kept gapped up again the next day, and then we'd sell off. But it was creating more of this sideways move. And whenever you see a market moving sideways or a stock moving sideways, you always want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. So in an uptrend, if you have a nice sharp upward move and then it starts moving a little bit choppy like this, it's likely that when that's done, that choppiness is done, it's likely it's going to continue to move higher. Or the same thing could be on the downside. Drop, it's trying to rally, but it's kind of choppy. A lot of times it can mean you can have another move down. Now, it didn't move sideways for very long, and these were two really strong days, Friday and Monday. So maybe maybe that takes out that risk. But I was a little bit concerned right here that I was looking for any sort of bearish reversal candle right there, and I would have been shorting the market or buying puts or something like that if I would have seen that. This type of candle formation needs confirmation. The confirmation on this, it would be very bearish, as if the market were to close below today's low. And I'm assuming this is how it looks at the end of the day. We still got another hour and a half before the market closes, but if it looks at this way into the close, then if we were to close below today's low tomorrow, if we had a down day tomorrow and ended up closing below that low, especially if there was higher than average volume on that, then we'd be at risk for, at the very least, maybe a move back down here to retest these lows again. So that's something to kind of keep an eye on over the next couple of days. And like I said, we should be able to see I think by Thursday we should either be up here above this 458 area and breaking, having a lot of confidence, and that would work perfect, because that's the stock specific class, and we can probably start jumping into a bunch of stuff that day. Or if we do close below this low tomorrow, we'd probably see on Thursday, we'd probably seen a big down day on Thursday, or a decent down day on Thursday, and we'd probably be back to being cautious and waiting. The other indexes are basically the same, so we can kind of go through those pretty quickly, but you can see they all kind of have that same kind of price action. Another thing that could, if you're looking for a reason that could cause the market to go higher or go lower, there's big earnings coming out this week. Google, I think is Facebook. I know Google's reporting. I think Apple's reporting. God, I'm drawing a blank now. Oh, Nvidia, AMD. There's a lot of these that could be the reasons why the market breaks the upside or the downside, and could change the movement of these indexes pretty quickly, particularly the Nasdaq 100, because all those stocks are basically Nasdaq stocks, and they're in the Nasdaq 100, so they could really have an effect on how that index moves. And here's the Russell 2000, kind of same thing. All right, let's keep going on the list here. The bonds, we've been back and forth. The bonds have been moving sideways within this range right here. And this is an example of, again, you tend to alternate between impulsive and corrective. So you had impulsive down, here was corrective. This is what moves sideways. Because the previous move was down, it was more likely we're going to continue to move lower. I talked about that back in here. Sure enough, we had another impulsive move down, and then we've been moving sideways. So my expectation, based on how it's acting right now, and again, I'm flexible. I can change when I start seeing, other data, chart data, suggesting I need to change my outlook there. It's acting like a downtrend, so I'm assuming it's going to keep going down. I would assume it should have another impulsive move down, which means in this context that we should see bond yields go up, which would make sense because they've been going up based on the expectation that the Fed's going to tighten and raise interest rates, and that tends to cause bond yields to go up. Now, what would change that? Well, it really have to. It would have to have an impulsive move up and then have a corrective move for me to feel like we're reversing back into an uptrend, or have an impulsive move down and an impulsive move up. That would be maybe an indication that there's a trend reversal there. But as of right now, lower highs, lower lows, we're acting like a downtrend. And so we're going to assume that that's going to continue to move down. Gold, you can see why I just haven't wasted time with gold. Last week, I actually was talking about the possibility this was acting like an uptrend. It was higher highs, higher lows. Maybe it was finally starting to trend again, and then impulsive down. It just dropped. So again, you want to see the context of this. Just back out to even a 2-year chart. You can see it. It's just moving sideways. I just see there's just I just don't see any reason to trade gold until it can show me that it can stay in a trend, and it's because this is telling me that the professionals don't know where gold is going. Okay, they don't know where the hell it's going. Excuse my language, but they're confused as to where it's going to go. And these are the professionals. These are the ones that that's all they do is follow gold and all that stuff, and they can't figure out whether it should be going higher or should be going lower. So why do I want to get involved with that? I'd say you guys figure it out. When you guys figure it out, it'll show up on the chart, and then I'll be interested in maybe coming on board there. But yeah, it's too erratic for me to want to take on right now, especially when there's such other stronger trends out there. I'd rather be in gold. In oil. Oil's trending up nicely. This is a really nice chart. you had this is textbook. You broke out to a new high, you pulled back to retest it right here. What used to be the ceiling is now the floor, and then you've broken out higher, and then you kind of move sideways along that breakout here. This is showing a little bit of uncertainty, and it could still pull back a little bit off of that. But overall, it's still acting like an uptrend. It's one of the few areas that I have confidence in right now. Also, because you can see, what if Russia, and maybe they have, I haven't checked the news, I would imagine there'd be a big market reaction if they had moved into Ukraine, but oil tends to spike on news like that, and so that's something to be aware of. The chart of the dollar is looking like it can maybe come down a little bit. We'll look at that next. So that could be, the commodities and the dollar tend to move inversely in the opposite direction. Let's look at the dollar here. Now, the dollar did end up moving higher. I told you back in here, you had this impulsive move up. This was corrective. Now, off of this real sideways range, this is something that just tuck this away in the back of your mind, because this happens from time to time when you have these real sideways type moves. Remember, the sideways move is reflecting indecision. Buyers and sellers can't decide whether buyers aren't confident it's going to go higher, sellers aren't confident it's going lower, and it gets stuck in this range. Sometimes you get a false move that can break out of that uncertainty. And sometimes out of these real sideways moves, you'll get a dip down below the bottom of that range, and that'll trigger the buying. And sure enough, it sold off sharply right here, the dollar did, and then the buying picked up right here and pushed it. There's your impulsive move higher. Went to a higher high, slightly higher high, but that's it. It went to a higher high. Remember, whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. But the key part of that phrase is that I'm not saying it has to go far. It doesn't mean it's going to go way up after it's done moving sideways. All it needs to really do is break out to a new high, and that's what it did right here. Broke out to a new high, and then you had a sharp move down. When you have a impulsive move up, and maybe, we don't know yet, that's still a question mark, but do we have an impulsive move down right now? That could be reversing into a downtrend. What would give me a little more confidence of that? Let's say it tries to rally for a couple of days and it gets real choppy like this, and then has another impulsive move down. That might be an indication that you're getting a reversal in the dollar, and that the dollar might start going downward. That would tend to be a little more bullish for commodities. You definitely see oil rally off of that. You might see gold. Gold hasn't been moving consistently through any other movement. So I don't know. I'd have confidence that gold would go higher, but that would be one thing that could push gold a little bit higher, is if the dollar started to fall. So we don't have a lot of. We it looks like impulsive up, possibly impulsive down. So this is a possible trend reversal. We'll keep an eye on that, see if we have any clarity on that later in the week. The VIX came right back down. It started to spike up again, and on that sell-off came right back down. We're getting back down to these lower levels. That would tend to be a little bit more bullish. That volatility is starting to decrease a little bit. SMH, again, you'd like to compare this with the NASDAQ 100. It tends to be a leading indicator of the NASDAQ 100. Stronger bearish reversal candle today. So we'll keep an eye on that. Now, remember, you've got AMD reporting, I think tonight or tomorrow night. I got to look at my calendar. And NVIDIA later in the week, I think it's like Wednesday or Thursday. Those are going to be big drivers. Intel's already reported. Intel's actually been up a little bit. And so I think it's flat today, but it had a pretty good strong move up. So again, we still don't know. I think that'll be a pretty good indication as to whether this is a bounce or a move lower, or if we're going to continue to move higher. The chip stocks have been really a leading indicator of the markets in general lately. They've been very similar to the transportation stocks, which we also look at a lot. Now the transports, we take a look at those. moving very strongly today. Nice big move up today. That'd be a very bullish sign. So you have a little bit of a big signal here. You got the chip stocks that have a little bit of a bearish reversal candle. Now earnings, they're so unpredictable, so that it really could possibly mean nothing. That the showing a little bit of a bearish candle, and I don't know how the market will react to those earnings. You could have a great earnings report from AMD, and AMD could drop. Because maybe the expectations going forward might be different, So that's why I don't trade earnings. There's nothing in trading that's felt more like just pure luck than trading an earning announcement. And the problem is that if you do get it right, you buy the stock and it goes way up. You think that you are smart, that you were smarter than everybody else, and I knew it was going to go up. I knew that those earnings are going to be good, and people like to brag about that. But it's like flipping a coin and it lands on heads. You're like, I knew it. I knew it was going to land on heads. I just knew it. Yeah, whatever. Go flip it about 20 more times and see how you do. It just feels like pure luck a lot of times. So I don't like to. I've done it a few times. If I do feel like there's a lot of things lining up, especially if it's really beaten down and there's really not any more bad news that could push it lower, sometimes I'll usually I don't trade the stock. I'll buy like a call option or something, but those options can be kind of expensive around earnings. But I don't do that very often. But transportation index here looks pretty bullish. This looks, and I was talking about this before, how this might be just a large ABC pattern here. Let's look at a longer term chart. Let's see what I'm talking about. That this will move up and then kind of a larger ABC. That's a deep retracement if it's an ABC, but it didn't go lower, so it's possible. And now it looks, at the very least, you'd expect it with the move it's making to get back about to here, at least back up to that breakout area. If it can break out above here, holy cow, that'd be very bullish for the markets. Because and remember, the reason why we're looking at transportation stocks is this is a good reflection of the economy. Is these are the things that are moving products around, the shipping companies, the train companies, the airlines, the UPS and FedEx, and that you usually can give you a pretty good idea of the health of the economy. So far, it's looking pretty good with the move of the transports here. Bitcoin has not been doing very well. It did have a nice, strong bullish reversal right here, but I've been concerned that it's just been kind of stagnant since then. It really hasn't gone, and you have to worry that maybe it has that one more flush out move to the downside. So it's come down a lot though, so it's like it's probably close to a bottom, but I don't see a lot of strong. I'd like to see more of an impulsive looking move up to give me a little more confidence that it's starting a new uptrend, and I don't see that yet. All right, so that's the indexes there. Real quickly, look at a couple stocks. Like I said, oil stocks. I'll show you the oil stocks I'm in and I like. Retail. This is a sector to keep an eye on. Retail stocks tend to lag in weaker economic conditions. They tend to lead and they tend to be at the top when the economic conditions are strong. Obviously, this is a reflection of people going out and buying things. So if we start to see retail as a sector get up here, it may not displace oil. Oil seems pretty solid as the top sector to be in. But if it can stay up here and move up, that'd be a good bullish sign too. Same with computer and technology as well. These tend to be leadership groups. So when they're strong and they're up here near the top, that's usually a pretty bullish sign. Okay, thank you. There, someone looked that up. AMD is reporting after the bell today. So retail, let's go into retail here. A lot of these were, I need a lot more confirmation, but these are ones you can maybe put in a watch list. STKS, 98 strength rank. Switch this back to signals here. What I'm looking to see, this one has a little bit more to, and we're waiting for a buy signal anyway, but possible little double bottom right in through here. Did have a pretty decent pullback. I'd want to see it clear this area right here, which is probably about when you get that buy signal. But if you got a buy signal earlier, you might want to wait to see if you can break out above here. I like to look for these stocks that look like they're kind of forming that bowl-shaped move. And this is kind of looking like it's at the bottom, possibly at the bottom of the bowl. But you'd want that extra confirmation that you're going to a higher high off of that. And so that's what I'd be looking for on this one. But we can put it in the watch list. Let's go ahead and add it. And then let's take a second to do that. Hold on. All right, let's go into another one in retail. Was this Dillard's DDS, 97 strength rank? Kind of the same thing here. This big run up, fell off a cliff. This was when the Omicron, and that killed a lot of retail because everyone's thinking, oh, here we go again. You know, next COVID strain. But it's stabilized. It's kind of formed this bottom. It looks like it could be starting to move up the right side right here. It's going to a buy signal today slightly. But again, I'd like to see it clear this because it looks, if it can, that would make that a higher low and you'd see a higher high and it'd be a much stronger indication that you're taking off. So I'd probably wait for that little bit of extra confirmation, but this is one you could keep an eye on. Let's put it in the watch list. And then I'll do one more here. Industrial products. This top one here, ATKR, 96 strength rank. And this is based off of, you have a nice uptrend here. This looks like it could be a larger ABC correction right here. Well, bearish reversal candle today, but, we'll wait for this to go back to a buy signal anyway. And there's this, you could also, as additional confirmation, wait for it to break out to new high. You don't necessarily have to do that, but there's different entry techniques you can use. But this is one that we can kind of keep an eye on, see how it looks. We'll add it to the watch list. Yeah, as far as the portfolio, these could be additional ones that we look at here. I've got 3, and I've got about 8,000 in each one as far as but I have really tight stops on Marathon. All these I got back into today, earlier today, but on Marathon, I've got my stop right below this low right here. Nice breakout move again. That should, like I said, this thing should keep going higher. Maybe that'll be a little bit too tight of a stop. We'll see. But I like that pattern. The next one was Devon, DVN. Same thing. These all look about the same. They will pull back after they broke out. And again, this is back last week. Last week I rode this move off the bottom right here. But then I started, and this is what I wasn't able to cover in the stock specific class last Thursday. But I got out of these because of the bearish reversal candles. They look like they could pull back a little bit. And they did pull back a little bit, but we were still worried about the whole market having maybe one more move down at that point. So I just didn't want to be in anything. But I got back in today. This looks like a nice bullish reversal, like really tight stop. I think I had my stop at like 48 or something like that, down around here. And, if these reverse and come down sharply, it could mean that the whole market is doing that. So that's why I don't mind having a tight stop. And I get it. I get that with some of these, I understand that with some of these things you take into consideration taxes. Okay. I never talk about taxes, and I chose early on in my trading career not to focus on tax implications of trading, because I think sometimes people are so obsessed with taxes that they let nice gains end up turning into losses because they don't want to take those capital gains and have them, be taxed on, So to me, that makes no sense. To me, you should be wanting to pay as much taxes as you can, because that means you have a lot of profits that you're paying the taxes on. What people will do is they do the opposite. They're so worried about paying the taxes on the profits that they do get tax benefits, but it's the write-offs from the losses that they're using which doesn't make a lot of sense. I don't see the logic in that. So I just made a lot of dumb decisions early on based on taxes. And so I just said, forget it. I'm not going to worry about it. My account will worry about that, or he'll deal with that. I'm going to just focus on making money and profits, and all that stuff will take care of itself. So if you see me jumping in and out of stuff and you say, oh, the taxes on that, or there's tax consequences or something like that, you're more than welcome to consider those, but you're not going to get it from me. Just too many bad things can happen usually when you're doing that. Now, I'm not saying there can't be isolated situations. Maybe you're making decisions at the end of the year that do have big tax consequences, and they're going to be very short term. You're going to get out of something and get into something else, or I get that, or you want to be taxed in next year or this year as opposed to next year or something like that, because you think taxes are going to go up. I'm not saying I never ever consider anything like that, but just as a general rule, I'm not going to be worrying about it, because it's just one other obstacle otherwise. And let's go to one more here that I'm in. Oops. Let's go to portfolio. We don't have to go through all those. CLR, it's the same chart pretty much still. I've got my stop down here at like 49, I think. Nice big update today. It looks like it's getting ready to break out. There was a question on DDS. Yeah, that's a good question. DDS, it's been moving sideways. The previous move was down. Would it be much more likely it's going to go lower? It's possible. Yeah, that's always possible. But especially with bottoming patterns, when it's really been moving sideways for a long time like this tends to be more of a basing behavior. It might not be. It could have another move down. That's definitely a possibility. But as far as it's dropped, it's come all the way down here. Here was a previous breakout area. It just seems to be just finding that there are buyers right here. There are buyers that pushed it out of this long sideways range back here. It's back here, and they're holding it right here. That's what I'm seeing, is buyers are holding it, but they're not overly excited about it, which would be understandable. They'll probably wait for better news on COVID, which I think we'll start getting better news on COVID day by day, I'm sure, here pretty soon. And by better news, less bad probably at first, and then maybe better news. And I don't want to say that in a unempathetic way, because I know, many of you might have lost loved ones to COVID, and sometimes you talk. It's like, there's only it's positive news. Only 10 people died instead of 100. Well, yeah, that would be positive news for most people. But if your loved one is one of those 10, it's not too positive. So I don't want to appear insensitive. Is the word I was looking for. But these retailers, especially these institutional traders, I can tell you they're insensitive. They care less about your loved ones. They are probably, but they're just probably waiting for that more positive news, and that's why I think we're starting to see it creep up to the upside. But I think just if it could break out of this area here, you'd have your higher high, higher low, and you at least have a tradable bottom that you could probably get into. You could then put your stop down below here, and if it did still have one more move down, you cut your risk. But at that point, the risk, you'd still, if it does clear this, it's probably working its way back up to here. And so just visually looking at that, the potential reward at that point of going up to here versus the risk, I can see a lot more reward potential for the risk. And that's how I'd be playing that. But no, that's a good question. I get that from time to time. But it tends to be, when you have these real long sideways moves, they tend to be basing formations. All right. So that's where we're at right now. Like I said, the portfolio, I still have 61,000 in cash, and that could be more if those oil stocks start turning low and the market starts turning lower. But we'll see how things look on Thursday, and if maybe we can start adding some and getting more invested if we can start clearing those levels I pointed out today. All right, thanks everyone. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.